Let's have a look at my favorite candlestick formations and the one that I would really advise you to look at and to really memorize as well, because they are super powerful and the psychology behind them is really nice as well. So it's definitely worth actually having a look at them. So again, I use 4 formations. The first one is a doji, which is a single indecision candle, right? So if you turn back to the previous slide, you can see small body and wick. This is an indecision candle. And again, the dojis, if you already had a look at all of those candlestick formations, you have a dragonfly doji, you have a gravestone doji, you have a long leg doji, and all of those dojis, right? So is it mandatory to learn those? It's not, okay? But if you want to, make sure to have a look at them. They are all over YouTube and in the internet, right? But again, a doji is usually classified by a very small body with big wicks. So actually it doesn't matter if the body is on the top, which is a gravestone, and it's if at the bottom that is a dragonfly, or if it's like a long wicks, which is a long leg. It doesn't matter, because at the end of the day it indicates the same thing. It's indecision. The market tries to push up, fails, tries to push down, fails, and then closes exactly where it opened. So neither the buyers nor the sellers were in control. So this is important to understand about dojis and their psychology, right? Next, we have engulfing candles, good old bullish and bearish engulfing candles, strong bullish pressure, strong bearish pressure that will usually, you would like to see the previous candle to be engulfed as well. The whole candle, both the body and the wick of the candle. So this is, for example, a nice bullish engulf right there, because after this candle right there, the market strongly engulfed everything and even engulfed the previous candle. And sometimes, even when I was starting out as well, I got a lesson that the more bodies, the more candles an engulfing candle engulfs, the stronger it is. So for example, if you see a strong bearish candle like this that engulfs like 3, 4, 5 candles on the left, then this is nice. Okay, so it's really strong. Then next we have simple rejection. So again, this can be called shooting star, this can be called hammer, this can be called pin bar, it can be called whatever it is. And what it is a simple rejection candle, right? Again, if we go back to the previous slide, look at that. We have a long wick that indicates rejection. So this is a bullish rejection that comes from the downside. So again, it's super important right there to pay attention where the wick is formed. What is the direction of the wick? If the wick is to the downside, then that means that the pressure is coming from the downside, right? Because the market opened right there. Again, pay attention where the open is. We pushed strongly to the downside, but while we were pushing down, a lot of buyers came in from that level, and then they pushed the market all the way up and actually closed bullish. So this is a really strong bearish rejection. While with the other example, the market opens right there, strongly pushes into the highs, but finds a lot of resistance and then rejects all the way down and closes bearish. So this is a bearish rejection, and this will indicate that a lot of sellers are entering in this specific area of the market, okay? And then we have the morning star and evening star formation, which is a combination of a normal candle, a rejection candle, and then an engulfing candle, okay? So we have the market trading down, we start to reject, we tap into a supportive level on the left, the market rejects that level and forms this rejection candle. It can also be a doji, don't get me wrong, but you usually want to see a little bit of indecision, all right, or a rejection. And then the third candle is actually a strong bullish engulf that engulfs this candle, the indecision, and even it's really nice to see that candle engulfed. So that is the first candle that comprises the formation, right? So as you can see on the right as well, we have the market pushing to the upside, starting to reject a little bit on the top, then created this beautiful rejection candle right there, and then a massive bearish engulfing candle that engulfed this candle and even this one on the left, which is the first one. And this really signifies a strong selling pressure, and this is a pretty nice formation to actually spot on the bigger time frames like the daily and the 4 hourly, because most of the times this will be a nice trend reversal. If this is your 4 hourly, so this is 4 hours, 4 hours, 4 hours. So this is 16 hours worth of information, all right? And if you jump on the hourly time frame, you're gonna have 16 candles. And those 16 candles can actually be a nice uptrend, consolidation on the top, and then a potential reversal, which actually is gonna bring us to our next slide, which is understanding how the candles are combining themselves, okay? So the first step to understand the psychology of the candles is to be aware of how they develop between the different time frames. So for example, a few lower time frame candles can build one higher time frame candles, right? A daily candle is built by, what is it? 6 4 hourly candles, right? And it's built by 24 hourly candles. And it's built by a lot of 50-minute candles. I'm not sure how much, but it's built by a lot of 50-minute candles as well, right? And if you have a look at that example, so let's say this is your 30-minute time frame. So you have the market opening right there. It strongly pushes to the upside, but it rejects, okay? The next candle opens, and this is an engulfing candle because it engulfs the whole candle, both with the open right there and with the wick. But if you combine this, how it's gonna look like on the hourly time frame, right? So the market almost right there, strongly pushes to the upside, forms the high right there of the range, the wick, and then strongly pushes to the downside and closes where this candle closes. So as you can see, the open is actually the same as the open of this candle, and the close is the same as the close of the second candle. So we just take those two 30 minutes candle and combine them into one, right? So I really hope that is clear, because there is a very nice exercise that you can actually practice. I'm gonna show you just in a bit, okay? And then finally, candlestick formations work great. However, our focus is not on identifying them and trading based on them. All right, it's really great that you know all the candlestick formations, because this is all additional knowledge that adds up to your trading. It adds value to your trading. So again, I am not telling you don't learn all the candlestick formations. I'm just telling you that you don't need them for sure, right? Our main focus is to identify market structure, spot our key levels, the lower highs, the higher lows, the formations that we already learned, and then use the candlestick knowledge to identify pressure, rejection, or indecision. Again, we come to at the beginning of those three super important candle behaviors. Is it showing pressure? Is it showing rejection? Or is it indecisive? So struggling to pick a direction, all right? So that is really important for you to understand. And of course, when the market is in an area of a higher low or a lower high, right? So this is our area of interest from which we want to take a trade. Then we will actually monitor for that behavior. We're gonna, for example, jump on the hourly or on the 50-minute time frame. We're gonna see, okay, so do we have rejection from that level? Because a rejection will potentially confirm a potential reversal. And do we have indecision? Indecision will kind of show us that the market is starting to struggle to continue higher or lower. And of course, do we have pressure? That is gonna show us that potentially the market is gonna reverse, right? Super important. And of course, remember that you need confidences in order to take a trade. Our biggest confidence will be market structure and the formations that we already learned. And then when we look at candlestick formations, this is gonna combine all together with everything that you learned so far, and it's gonna build you an edge, all right? But again, I repeat myself, we don't base our edge on candlesticks. It's just a nice addition and a nice value to your trading. So I'm just gonna jump straight into the charts right now, just to show you a very quick examples on how to train your eyes on spotting candlesticks and how to actually identify how a daily candle, for example, consists of 6 4-hourly candles and this sort of concept. All right, so we're on to the charts right now. This is Euro JPY. This is actually fresh analysis from this week's weekly outlook and setups. So again, as you can see, when you open the chart, you have the candlesticks, but are you supposed to identify each and every one of them? Not really. Again, all you need to identify is rejection from the top, rejection from the bottom, and potentially indecision that shows you that the market is just not ready to pick a direction. Okay, so again, as you can see right there from the top, the market strongly pushed into the highs, started to reject. Then the next candle is a big rejection. That shows us a strong push to the upside, but then a lot of sellers entered that market and pushed the market down. Then the second candle, you have a second push. So the market again tried to push up, but again failed like really miserably, because this is a big wick on the top, and then what you see is following strong pressure to the downside in the form of bearish engulfing candle. And what we do, we actually break all the structure on the left. This structure was broken, this structure was broken, and what is this formation actually? This is a potential MSS formation, right? We have an uptrend, the market breaks all the structure, pulls back for the retest, and have a look at that candle right there. So how can you actually imagine this candle, that is a 4-hourly candle, to look like on the 1-hourly time frame? Okay, so this candle right there is comprised of 4 hourly candles. So what I imagine is the market starting right there. Again, this is your open, right? Again, make sure that you know where your opening closes. So we open right there. The market starts pushing to the upside with one strong hourly candle. Then the market continues to push up, but potentially starts to reject a little bit right there. Okay, then for example, the market forms a little bit of a bearish candle with a wick on top. So something like this. Oh man, this is gonna be hard. So this is a candle with a wick. Let me then make all the bodies a little bit bigger. Okay, so we have something like this. We open, we push to the upside, we push to the upside again. Then this candle rejects, and then we have a strong bearish engulfing candle that actually closes below the open of this first one. So this is how I am imagining this on the hourly time frame. How do I imagine it on the 15 minute? Well, again, we build the story. The market opens, forms a little bit of an uptrend, then consolidates on the top, wicks above, and then we start to pump to the downside and actually close below the open right there. So again, if we take this information and we jump on the hourly time frame, what do we have? Yeah, it's slightly different. You will never get it exactly right, but it's important to identify that the market started with this bullish candle right there, right? It strongly pushed into the upside. It rejected on top, as I indicated, and then you have this strong bearish engulfing candle that actually closes below where the market opened right there. So those 4 candles right here, if I actually should be precise, those 4 candles right here, this, and this comprised that full hourly candle. And then if I drop to the 15 minute, you're gonna see a little bit of an uptrend, consolidation on the top, and then a potential push down. So this is a really great kind of exercise that you can do. For example, let's say you are looking after this break of structure to the upside, pullback. So you want to identify when the market is actually about to reverse. Okay, so up until this point, you have that strong pressure to the downside. So do you want to buy after this big bearish engulfing candle? No, you don't. All right. Then you have this candle, but what does this candle show you is a wick on top. What does a wick on top mean? That the pressure is coming from the upside, right? And then what do you have? The market sliding to the downside, and just pay attention where the wicks are. Top wick, top wick, top wick. There are some from the bottom, of course, but those are more or less slow, indecisive candles. Nothing much. Then we have this. This is really nice because this is actually when the market retested the broken structure and strongly created a bullish rejection, right? This rejection comes from the downside. So how do we imagine this candle? Again, the market opens, pushes to the downside, rejects at the bottom, and then closes a little bit bullish. So if we drop to the hourly, strong push to the downside, rejection, and a strong bullish close. What is this formation again? That we learned just in a bit. This is a morning star formation. Strong bearish candle, indecision at the level, strong bullish candle. Okay, so this is first signs that the market is about to reverse. And then we're gonna go on the 15 minute and we're gonna wait for a clear break of structure. But again, on entries a little bit more. This is not a clear break, so we have to wait a little bit more. Okay, so here is the break of the market. And if I jump on the hourly time frame, you have a little bit of a pullback, bearish candle, but then the market emerges above. So this is actually showing you signs right now that we are reversing, and potentially you can be looking to, for example, take your trade from here and then, for example, take it to the top, right? Wow, what was that wick right there? So this is possibly news, but again, we didn't get stopped out, so potentially the market is gonna continue right now. But again, I really hope this is clear. This is a really nice exercise that you can do by identifying rejection, by identifying engulfing candles. Have a look at that big pressure. So how can you actually enter before that big pressure? So go to analyze the candles. How do they develop? How do they look like on the hourly? How do they look like on the 15 minute, right? And this exercise is actually going to build the visual skills that you need. So once you actually see a rejection, you're like, okay, so something is happening right there, and the hourly potentially showing us a reversal, and we can expect the market to reverse. Okay, so that is the little exercise that I wanted to share with you. I really hope you are gonna apply it. And right now, let's just jump straight into time frames, and then the real fun is gonna begin.